All right, welcome back to the Johnson Wealth Advisors podcast. I'm your financial planner, Elvis Johnson. Um, Today we have with us Miss Jennifer Finesse, the owner of Fiscal Finesse.
Yes. Thank you so much for having me, Elwes.
And not a,
I'm so interested in talking to you and learning from you. So thank you.
and not a problem at all. The big thing today that we're going to talk about is alternative investments. So we're going to kind of touch on that umbrella of alternative investments, and we're probably going to spend the majority of our time in the REIT world. For those who don't know, REITs means real estate investment trusts. Again, like I said, we're going to touch on a couple different things and alternatives. Now, I do have to say that alternative investments may not be right for everybody, and I'll kind of even broaden that out and say they're typically not right for everybody. So it's definitely a conversation that you need to have with a professional before you think about investing in alternatives. Some of them do have minimum investment amounts. Some of them require minimum net worth amounts. So again, have a conversation with a professional before you do this. So Jennifer Finesse, you work in the financial world. What does your business deal with?
Yes. I am the owner and president of Fiscal Finesse Consulting, and we primarily help folks to get to a place of financial mobility. So, helping individuals and business owners to understand what to do with their money. So we help folks grow their portfolios, just understanding like how to get the best credit score, to start saving money, to create a traditional budget, as well as to eliminate debt. And then after that, we kind of pass them on to Johnson Wealth Advisors. I'm sure you got a call this week from one of my clients, Tresha.
Yes, yes. Actually, I did speak to her. Thank you very much.
You're welcome, because I'm like, okay, now that you're at this point, you need to talk to a financial advisor. So we help them get ready for Johnson Wealth Advisors.
I appreciate it. So we know we've talked in the past about your stocks, your mutual funds, and those basic things, ETFs that people can find just anywhere, indexes like the S&P 500 and the Dow Jones. But what do you know already about alternative investments, or what have you heard?
When working with me, Elvis, you know that I am risk adverse. I don't want to lose $2, let alone a lot more.
Mhm.
So my thing is, I was ready to purchase additional real estate. I have some real estate investment property, and and the home that we're in. So I was ready to do that, and talking with you, I was like, okay, this is what I want to do. Here's how much money I have to invest in and all of the things. And then you start telling me, hey, you don't even have to own the real estate and you can gain a benefit, of investing in it. And I'm like, I'm wide open, ears wide, eyes wide. And I don't know a lot, but I just say, you know what? I'm going to invest a small amount and see how it goes because I'm open to it. I just want to learn from it. So that's all I know. I only know what you told me, and I haven't done a ton of research, but I do trust that this can help me, and also I can't lose from it. That's the biggest thing.
Well, it's not necessarily that you can't lose from it. There are ones that you can lose, but this is very um, it doesn't track like the S&P tracks. The This one particular that we're talking about, and I can't name it, just for purposes, and it'll seem like I'm endorsing something to the masses, but the maximum drawdown in its 10-year history is very small, especially when you look at to more traditional investments like the S&P 500. For example, the market has already gone down more this year than the max drawdown on that particular investment. And of course, the market is now back up. That's why the news is quiet about it for now. So, with alternative investments, it can be like Jennifer Finesse has mentioned in talking about um, real estate, where a REIT, real estate investment trust, takes all of their billions or trillions of dollars and goes and buys properties that are in alignment with their objectives, be it warehouse centers, distribution centers, data centers, high rise apartments in downtown areas, or massive apartment complexes. And you put your money in with those trillions, and you are paid the rent that is paid to the REIT. And so that cash flow comes to you. So in that case, the value of those investments are really your growth, and your dividends are the rent payments that are received. There are other alternative investments like a structured CD, again, which is a little bit more complex. It's like your regular CD, but it has buffers against loss because it has market growth features. Mm-hmm. There are other alternative investments like private credit or hedge funds, where they're not as let me not say not as regulated, because they are very regulated, but they're just not like a regular mutual fund that you can buy here or there. The rules are much broader of what they can do. You. Yeah.
When you just talked about the structured CDs, I don't know that I'm 100% familiar with that. Like, what type of rates are those?
So those rates on structured programs really depend on the offering that month. Okay. So it could be, so like what some of the past have been, say, for example, a 3-year or a 4-year CD that is either FDIC insured against loss, or it is protected by the issuing institution. So it's how good is their credit, because they're going to be the ones backing it. But the rate cap is going to be tied to an index or sometimes a specific stock. So in the past, they've been tied to some specific stocks, and they say you're going to participate in the growth of that stock without actually buying the stock. But the maximum is going to be 30% over this 4-year period, or 60% over a 5-year period. So the rate obviously gets higher the longer you leave the money in. But it can be where your money has the ability to be principal protected, either through FDIC or through that issuing bank's credit. So it's different than a traditional CD where, hey, you want to keep it in here for 4 years, we'll pay you 5%. That's a guarantee that they're going to offer to you. In this case, you got the guarantee in one hand, you give up that guarantee for the possibility over that 4-year period of 40. So what if the market goes down? Well, you don't lose anything. You just didn't gain anything either. So in a sense, maybe you lost that 5% guarantee that they had, if that's the number I said earlier.
Now, yeah, the opportunity cost too.
Exactly. So that alternatives can be a very, very wide pool to jump in. And you just really got to consider those. So I know we're going to cut this one just a little bit short.
I would definitely come back.
That we introduce alternatives and all that they can do to protect or to, sorry for the fire truck sound, but to protect or to diversify your portfolio for either precious metals, real estate, credit, or hedge programs. So there's plenty of them out there, plenty of options out there. Don't forget, contact Jennifer Ness for your financial consulting needs and budgeting and getting all that stuff right. How can they contact you?
They can contact us at fiscalfinesse.net. That's our website. And yeah, we're on all the platforms. So any social media, Fiscal Finesse is our company.
All right. And for any future questions that people want to hear about, comments are disabled, unfortunately, on YouTube to keep compliant with FINRA and the SEC. So you have to go to my website, johnsonwealthadvisors.com, ask a question, or give us a call, 253-356-8612. Angie will be happy to take your call and your question, and we'll talk about it on the next episode.
All right. Thank you,
Thank you so much for being with us. Till then, see you later.
All right. Thank you.